If you sell products online, choosing your platform is more than a business decision. It is a tax decision. Etsy, Shopify, and Amazon FBA all handle taxes differently, from how they report your income to the IRS, to how they treat sales tax, to the deductions available to you on each platform. Knowing those differences can save you from compliance problems and from overpaying or underfiling. This video breaks down the key tax differences between Etsy, Shopify, and Amazon FBA in 2026, so you can make informed decisions and file correctly no matter which platform you use. Welcome to the Freelancer's Wealth Blueprint. Subscribe for financial guidance built for self-employed sellers and creators. Let's start with the foundational income tax rules that apply across all three platforms. Whether you sell on Etsy, Shopify, or Amazon FBA, you are a self-employed business owner in the eyes of the IRS. All of your platform income goes on Schedule C, your cost of goods sold and business expenses are deducted. The resulting net profit is subject to both income tax and self-employment tax at 15.3%. This is the common thread. The differences begin when you look at sales tax, how income is reported to the IRS, and the specific expense structures of each platform. Now let's go platform by platform. Etsy. Etsy operates as a marketplace facilitator. In most states with marketplace facilitator laws, Etsy automatically calculates, collects, and remits sales tax on your behalf. As an Etsy seller, you generally do not need to worry about collecting or remitting sales tax to states where Etsy facilitates. This is a significant administrative simplification that Etsy provides compared to running your own store. For income reporting, Etsy issues a 1099-K to sellers who meet the reporting threshold. The 1099-K shows your gross payment volume, which can include shipping charges collected and sales tax amounts that Etsy collected. Report this gross figure on Schedule C and then deduct the shipping and sales tax amounts as expenses, arriving at your actual product revenue. Even if you do not receive a 1099-K, all Etsy income is taxable. Deductible expenses specific to Etsy sellers include Etsy listing fees, Etsy transaction fees, Etsy payment processing fees, Etsy ad spending, cost of goods sold and raw materials, packaging supplies, and shipping costs you paid. Now, Amazon FBA. Amazon FBA, which stands for Fulfillment by Amazon, is where the tax picture gets most complex, particularly around sales tax nexus. Like Etsy, Amazon is a marketplace facilitator. In states with marketplace facilitator laws, Amazon collects and remits sales tax from buyers on your behalf. However, there is a critical complexity unique to FBA sellers. When Amazon stores your inventory in its fulfillment centers, that inventory creates economic nexus in those states, even if you never set foot there. Amazon may distribute your inventory across multiple fulfillment centers in multiple states. Each state where your inventory sits is a state where you may have nexus. Even though Amazon handles collection and remittance in those states, you may still be required to register for a sales tax permit in those states. Failure to register can create compliance issues even when no tax collection is required from you. For income reporting, Amazon issues 1099-K forms to FBA sellers who meet the reporting threshold. All income is taxable regardless of form receipt. The deductible expenses unique to Amazon FBA include referral fees, Amazon charges per sale, FBA fulfillment fees for picking, packing, and shipping, monthly inventory storage fees charged by Amazon, removal and disposal fees, cost of goods sold, including product purchase price and import costs, and advertising on Amazon including sponsored products and sponsored brands spending. FBA sellers also need to account for inventory management as part of their tax picture. The cost of inventory you have not yet sold is not immediately deductible. You deduct the cost of goods sold only when the inventory is actually sold. Unsold inventory sitting in Amazon warehouses is an asset on your books, not an expense yet. Now Shopify. Shopify is fundamentally different from the other two in one critical way. It is a platform that helps you build your own store. When you sell through your own Shopify storefront directly to customers, you are not listing on a marketplace. Shopify is your payment processor and store builder, but it is not a marketplace facilitator. That distinction matters enormously for sales tax. On Shopify, you are responsible for determining where you have sales tax nexus, registering with those states, collecting the correct sales tax from buyers, and remitting it to each state on a schedule. Shopify's built-in tax tools can help you configure this correctly, but the obligation to collect and remit is yours. For income reporting, Shopify does not issue 1099-K forms directly in the same way that marketplace platforms do, unless you are using Shopify Payments as your payment processor and meet the applicable threshold. If you use other payment processors integrated with Shopify, those processors may issue 1099-K forms separately. The deductible expenses for Shopify sellers include your monthly Shopify subscription fee, Shopify payment processing fees, domain and hosting costs for your store, advertising and marketing spending, cost of goods sold, packaging and shipping costs, and any apps or integrations you pay for. Shopify sellers also typically invest more in marketing since they do not have the built-in audience of a marketplace. Those marketing costs, including paid advertising on social media, email marketing tools, and influencer fees, are all deductible business expenses. Now let's compare on the dimensions that matter most. Sales tax administration. Etsy and Amazon handle it for you on marketplace sales. Shopify requires you to manage it yourself. If you sell on Shopify across multiple states, you need a sales tax management system or a service to handle compliance. Income reporting forms. Etsy and Amazon issue 1099-K at applicable thresholds. Shopify income reporting is less centralized. Nexus complexity. Amazon FBA creates Nexus in multiple states through inventory placement. This is a compliance issue many FBA sellers do not discover until they face back taxes. Platform fees. As deductions, all three platforms charge you fees that are fully deductible. Know your platform's fee structure and deduct every dollar. For sellers on multiple platforms simultaneously, which is common, you report all income from all sources on a single Schedule C if they are part of the same business. The total gross revenue from Etsy, Shopify, and Amazon FBA combined is your gross income. Expenses from all three platforms reduce that income. Your action plan. Understand your platform's sales tax obligations. Track and deduct every platform fee. Deduct cost of goods sold accurately. If you sell on Amazon FBA, investigate Nexus in states where your inventory is stored. Pay quarterly estimated taxes from all platform income combined. Online selling is a real business. The platform you choose shapes your tax obligations. Managing them correctly from the start is far easier than untangling compliance issues later. Subscribe for more e-commerce and gig economy financial guides. See you in the next one. This content is for educational purposes only and does not constitute tax advice. Consult a qualified tax professional for guidance specific to your situation.